Does the market need corrections? A correction is defined by a loss of 20% or more, or that's an entry into a bear market. Sometimes, because of calamities like pandemics, you get a lot of volatility. And yes, they do go up and down, but nobody can time them. It's impossible to know. And sometimes they go up violently, then they go down violently. But long term, don't bet against America, because the S&P 500 has provided 8 to 10% returns for almost 200 years. Alterna 9 asks, are there any logical arguments to not invest in international funds? No. Diversification is also geographic. You can find indices that provide, like those are ETFs, that will help you invest in other countries like Europe. Europe, some years outperforms the S&P, you just don't know when. Far Lifeguard 5027 asks, why bother with medium small cap funds when the large cap consistently overperforms them both? Not true. Simply not true. The Russell 2000 has companies that are growing a little faster than the S&P, so in the right conditions, like lower interest rates, they tend to outperform. There's no guarantee, and you never know when they're going to outperform, but they're the small companies that grow into big companies, and they grow faster. This comes from Duke Thumper. Different. What percentage of portfolio is worth holding in bonds as a 22-year-old? Great question. When you're that young, you can take more risk. The market provides better returns over time. When you're starting out, you can be as little as 20% to 30% in fixed income, bonds, and 70% in stocks. And then when you hit 50, you go 60 stocks and 40 fixed income. Then when you hit 60, you go 50-50. That's kind of a general rule. And you're sort of de-risking yourself as you get a little older because you've built up a nice little nest egg. Generally, the market gives you 8 to 10% every year. Samiki asks, what sectors or stocks do you think will boom in the next few years? Nobody knows. 7 stocks have been the majority of the S&P returns for the last 3 years. That's a very concentrated amount, and there's no guarantee they remain at the lead of the pack. That's why you want diversification. You don't want those stocks to become more than 5% each of your portfolio. Something to think about.